Hello, hi, welcome to this video. This is Arvind Mota, and we look at the trade setup and market view for the week starting October 19th, 2020. Okay, so as you can see on the daily chart of Nifty, after this big fall on Thursday, we had a very narrow range kind of a move on Friday. And usually after a big move like this, markets tend to consolidate. So this consolidation may continue for 1 or 2 days. So the range I'm expecting Nifty to consolidate somewhere here. That is 11,660. That is the low which got tested on Thursday and Friday. And Friday's high of 11,788. Okay, 780 is a very strong resistance zone. That's where we saw it's not able to cross that. And even if it is crossing that, it may find resistance zones at 11,850 to 900. So we can expect further consolidation with a minor positive bias. So which means Nifty can go up a little more also and move sideways. So the range is very narrow. So 11,660 to 850 to 900. That is the range we can expect. So any kind of rally towards 11,850 to 800 may get sold into, and we may see further drop. And once it is breaking 11,660, we can expect 11,500, which is major support, also coinciding with the 20-day moving average, right? So since we have moved, the market has broken this crucial support at 11,780. It is now a sell-on rally market than a buy-on depths. Right, so we can sell the rallies up to say 11,850 to 900. That could be a stop for short positions, and between 11,900 to 12,000 I'll be a little cautious. Probably it can be a no trade zone, because if market wants to go up higher, it has to close above 12,020 zone. That is the high that was made on Thursday. So if this closes about 12,030 zones, we can expect 12,200 kind of a range, which market will tend to move up, right? So the range is very crucial, 11,660 on the downside and 11,900 on the upside. This is the range we can expect for the week. Any kind of move outside this range will confirm the further trend, right? Now this is on the Nifty. Now look at the Bank Nifty chart. Okay, sorry, let's come to Nifty weekly chart itself. Okay, now Nifty weekly chart is showing a bearish formation, right? There is price rejection at 12,000 zones. It will not be so easy to cross, so it is showing some kind of weakness there, right? Now coming to Bank Nifty. Now Bank Nifty, if you look at the daily chart, the overall picture, if you'll see, it is almost forming like a from here. If you can see, let me mark it out for you. From here, it made a top at 200-day moving average. From there, it made a bottom here, and again is making a top around 200-day moving average and starting to slide. So if this slide continues, this could complete a double top formation, which could lead to further downside. So there is strong price rejection at 200-day moving average, which is currently around 23,550 zones. That's exactly where Bank Nifty is. So it will be a tough hurdle to cross, and 200-day moving average is also sliding down from 25,000, right? So for any kind of further upside on Bank Nifty, it has to close about 24,000 range. If it is closing above, it can go up to 25,000 on the upside. But this will be a very strong congestion zone, and it's starting to show some kind of weakness, right? And a close below this level, it can go and test the 20-day moving average. On the downside, 21,000 will be a good strong support to work with. So there could be a strong, there could be a minor pullback rally, like based on HDFC Bank's results. There could be some kind of uptrend in the near term, like Monday, Tuesday, we can expect some kind of uptrend. But those rallies may get sold into, because any close below 24,000, we have to stay cautious. We cannot go too much on a long positions here. So we have to cut down longs and wait till it goes about 24,000. Otherwise, we can start being short on Bank Nifty. So that's the view on Nifty, Bank Nifty. Immediate trend seems to be minor pullback on the upside, but overall on a positional basis, there could be some slide which comes in, right? Looking at the chart of Reliance, a very major component in Nifty 50, it is showing signs of weakness, right? So 2175 is taking support there. Any kind of downtrend from there, it may even test 2100 levels. So there is a good trend reversal. You can see bullish pattern, a spinning top and a bearish candle. So very strong trend reversal. There could be more downside in Reliance, which may also pull down Nifty. Now coming to global markets. Okay, on Friday, as you can see, US markets actually closed flat. S&P closed flat. Dow Jones actually closed positive, but it lost a lot of its gains. And Nasdaq actually closed negative. UK, there's not much of move to read, because on Thursday they had a big fall and with minor recovery on Friday, which is understandable after the big fall. But let's little bit deeper into the US markets. Okay, let's look at Dow Jones. Okay, on the weekly chart, Dow Jones has formed a doji pattern. A bullish candle followed by a doji pattern could mean the momentum is getting slowed down on the upside. Now, the next candle pattern is very important. If this is a bearish candle, that is the next week, it could signal more downside and it may come down to 27,000 zones. Okay, this is on the weekly chart. Now coming to daily chart. Okay, daily chart, you can see there is a pattern like a shooting star, which could mean there is strong price rejection at supply zones. Looking at the intraday chart, you can see good gains for 2 days from this low, but almost all the gains were lost the last 1 hour. It is closed almost towards the opening price, right? So it is showing some kind of weakness, and if the weakness continues, there could be main reversion to 20-day moving average, which is around 27,800. So this trend may continue, but the next candle should be confirming that. But this is a pattern which is usually seen with weakness at supply zones. You can see 29,000 is a strong resistance zones. So it may not have much further upside, but there is more chances of further downside left here. This is on Dow Jones. Coming to S&P 500, the weekly chart is almost similar to Dow Jones. You can see there is a bullish pattern followed by a spinning top, which means momentum is getting lost. Very strong supply zone at 3,500. So it will be tough to cross it. Any kind of further upside, it has to close about 3530, 3540 zones. So if the next candle is again bearish, it may come to 20-week moving average, which is around 3,300. Around 200 points, it may go down, right? Looking at the daily chart, almost same like Dow Jones, right? There is strong price rejection here, and the intraday chart, you can see like a double top kind of formation. There is a lot of weakness towards the market close, right? So this is not a good sign. We'll have to wait and see how it pans out. Continued weakness in US markets will result in further selling pressure globally, right? Now looking at the SGX Nifty, let's look at SGX Nifty also as to where it is closed. Okay, almost same like Nifty. After the big fall, it kind of consolidating. Here you can see a slight pullback and a formation of a spinning top or a doji. So we have to wait and see how this plays out. This may even consolidate for another day before making the big move. It could be on either side, but there is a more chances of on the downside, right? Looking at the data for FII, you can see FIIs are back to selling in cash market, which is something which we have to note, because after 3 days of buying and they're gone to selling in cash market, and both FIIs or DIIs are on the sell side. So something which we have to remember, which is not a good sign for bulls. So there could be, if this continues, there could be more downside in the market, right? So that's on the index. So as I told you, we may see some uptrend, some pullback 100 points on Nifty, but there is more chances of a decline after that. We have to see if the rally is sustaining. If the rally is sustaining and close about 12,000, that means this is a bottom that is made here, and market is willing to move up further, right? So we have to see how it plays out. That's why we need to know the levels, and from there we can take a call. Now coming to sectoral performance, you can see next week there are a lot of results expected, mostly in the FMCG space. Hindustan Unilever, Britannia, Asian Paints, these companies are expected. On the IT space, Tech Mahindra is expecting to give results. Coming to index, you can say FMCG index is taking support at the 200-day moving average, right? And it is taking support here. Any kind of close below this may lead to more downfall, but if the results turn to be positive, there could be good strong pullback, and FMCG can tend to outperform. Okay, now coming to other indices, you can see, okay, let's go to NSE. And metals were doing well. So let's look at the metals index. You can see it's holding support at 20-day moving average and given a good rally. And it's if we exclude these two candles, which are like outliers, this could mean like a double bottom. This could lead to further upside, and it can take the metals to a further uptrend. That is a possibility. Right. Now coming to CNX Auto. Auto is also holding support at 20-day moving average, just forming a doji pattern. Not sure about further trend, but if it tends to go up from here, it may take support and it may take the auto sector on the higher side. So we have to see how this plays out. Then coming to Nifty Pharma also was doing well on Friday. You can see it's taking support here and showing good strength here. There could be more upside in pharma. Now, IT sector already looked stretched, and there was some good profit booking here, and is holding support here. So the trend is not very clear. There could be more profit booking also. But if the next candle is kind of bullish, if we see some kind of buying activity coming in, we can initiate more long positions. So IT is kind of indecisive as of now. We have to see how it plays out. So that is the view. In terms of sectoral and also index, the view for next week. You can maintain a sell-on rally kind of an approach for remaining 1 or 2 days, and if you see a breakdown below 11,660, there could be another 100 point fall, now 150 point fall to test the 20 moving average. But the US elections are coming in about 2-3 weeks time, so we have to be very cautious. US markets will turn to be very volatile. And depending on the results, there could be 10-20% move in US markets on either side. So we need to be very cautious and trade light and be prepared for extreme volatility in our markets also. So that is the view for the week. I hope you liked it. And whatever views I'm sharing is purely based on my own analysis, and I could be wrong. So if you're taking any trades, please do your own research or consult your financial advisor. Okay, have a good trading week ahead. I'll see you in the next video. Take care. Bye bye.